Good evening, guys. Ken at Tortoise Capital weekend reports for September 18th, 2022. Weekend swing trade frames. We'll start off with the sector analysis. So we've got the entire market has now crossed below the zero line. Energy has held up the best, but the way downward is being led by the S&P, which is already at minus 1 sigma. Tech getting smashed the most at minus 1.5. So that really bodes poorly for the market going forward at a really critical state here. Even staples are suffering right now. Consumer discretionary, largely on strength in Home Depot and Tesla, are resisting this sell-off the most, but they're still negative and dropping. The S&P getting smashed, and even the defensive staples are being taken out and slaughtered, and that's a really bad sign when all of your defensive plays are getting smashed at the same rate as the rest of the market, so that's not good. All right, quick look now at Ken H's trade frames. Many thanks for his hard work. So here are the Qs, and you can see he has been following the market, and in the primary direction he gets the SSC. This was a stop and reverse off of this trade on the 30-minute. He adds a second position here. The big gap down kicked him out, so he stops and reverses, gets a second position on a break of the dragon, and is deep in the money on this one. This is the 65-minute trade that he's working, and just absolutely dominating with it. Very well done. You can see long term this is really at a crucial level. That if this collapses, then you're talking down here in a hurry. So if that breaks 280, and if 280 breaks, holy mackerel, is this in trouble? Squarespace, not much to choose from here, except that we've got consensus consolidation at support. The last time it ran up, this time it only ran up half that way. So from here, 75 is not out of consideration to the upside, but if that breaks, 60 and 55 are both in play. That's a critical state ready to happen in either direction. That's going to be a great trade on Monday. Adobe getting smashed on earnings. Has violated all of the support already. It is now sitting at the last gasp at 299. Little hope for this one. Just don't see it happening. I would be ready to ride this one to zero, to the downside. But it gets above 299.50. There's a chance it gets to 310. But that's an intraday trade only to me. There's nothing good about Adobe long term. Nucor Steel. Was riding a nice swing trade, got out exactly where he's supposed to. Was a little slow getting in on this one, but I'm not ashamed of that. When this breaks, he gets short here in a second position here. Yeah, he could have maybe entered here or here or here, but let's be glad we got this one and then a second position, and then I'd lock that in with a stop right there and add another position if it breaks down. CPER, the copper index for the U.S. This is showing basically a significant slowdown in the business cycle. Copper is a good predictor of future economic activity. This is like a K2 ready to go to the downside. You could get short at 21, a second position at 2050, a third one at 1950. But on this one, a nice breakout to either side as possible, and I like that one as a tradable. Just follow the price on that one. This is CCRN, Cross Country Healthcare. He cashed a nice win here. There was a little bit of gyrations, but that's a pretty good payoff. This rebound here has settled into a zero state breakout to the upside or downside either way. This breaks out above here, that's all-time highs, and goes. Breaks down below here, I think it's back to 25. So I like this one in either direction. That's a good, strong posture. And he's got money in the bank to work with. This is CLFD, Clearfield Technology Sector in comma. The breakdown, significant. There was a collapsing dragon opportunity there. He doesn't take it, but we've got a consolidation here. So you could get short right away and then add a second position on a breakdown of that support at 90. Because if that breaks, then there's no support until 85. But a rebound from here gets up to 100, but it has to get out of, say, 104 or 106 before it can get through that gap. So there's a tactical trade in this one in either direction. This was a warning shot. We'll see if that was just trying to gather inventory to make a nice run up, or whether that was a precursor of big fail. You don't have to know which one, you just have to follow price. Nice. Ethereum has pulled back sharply from this nice run up to 15. I mean, that was feeling, hey, crypto's back. Psych, not so much. That's a minus 33%. It's a 50% retracement from the low to the high, so this is ready to break in either direction. Tactical trade only for the crypto gang out there. Teradyne, we set this one up as a critical state earlier in the week, and that thing collapsed through the collapsing dragon big time. He doesn't take that, but he does prepare a breakout from support or a failure, a breakout from resistance, I guess. No, breakout from support, and then if support collapses, this downside. I like that one in both directions. It has left behind all of this, so if that breaks, you're looking for support here at 75, 65, and 55. So there's a lot of room to the downside if tech continues to collapse. FedEx, oof. Well, that certainly washed out everybody's expectations, that big gap. But it's stabilized. So is this where it starts climbing the wall of worry? Or is it en route for further collapse? Boy, oh boy, is that ever something. You don't see that very often. That's the price right down here. Has left behind all of this. And now it's stuck right in the middle of all this. Wow. That looks like it just blew all the froth off it, and now it's up back to its fundamentals. I wouldn't be opposed to starting a new long-term position there based on evidence of improvements. Start off intraday and build it slowly and carefully with a market leader. Why not? Here's Devon Energy, one of our favorite traders. Let's see how he's getting on with this one. So he had the nice swing move here. Was able to stay out of the chop. Bought the breakout from above. Stop and reverse. In the money. I would look for this one for a continued fail or a rebound to here. If he's still short from here, then I'd put that lid on it at about 67, but I would reinforce it at 65.60. Tesla, this is starting to get a little problematic on the upside. It's been having trouble getting through this resistance level here. This is the third run at it that's pulled back. I like the higher lows, but it's got to get through this or it rejoins the rest of the market down. So I like that one as a base camp, ready to break in either direction as a tactical trade. And we'll see if there's any rebound in tech next week after this horrible last week. If so, Tesla's going to be leading the way up. So there's a strong case in either direction for tactical trade. All right, great work, fellas. We'll get this published and posted. Thanks, and we'll see you tomorrow.